All right. Good morning, everybody. How's everyone doing today? Hope you all had a very nice Thanksgiving. Great. Thank you, Johnny. Good morning, Ron. Hi, Pamela. John. All right. Crude oil moving really nicely this morning. Very active. Quick little trade here to get one and done, hitting a target one, hitting it perfectly for 18 ticks. Hello, Manuel. Hi, Miles. So you can see one and done. Then there were some really nice trades. You had the pink trade here with a small loss, flipping to long for a nice winner, then to short, another winner. So hopefully you finished the positive result here on crude oil. The market's just opened. You do have a short on the YM heads up, 35 194, triggering in. That's targeting 164, 148, 132, and 116. Stop at 231. Getting in sync with this earlier setup here. Just came back to the entry. Hopefully pushes lower. You can see the Qs are up on this micro Q with the Renko chart here on the left. Let's see what happens with this YM trade. Up 300 and something points overnight here, or earlier this morning. All right, so our money management level is at 35 167. If it can get there, that's when you will move your stop to break even. Let's mark it right there. Whoops. Got to get through that 50 moving average. Please remember to hit the like button for me. There it is. All right, hitting money management, move your stop to break even, and hitting its first target objective. That's good for 30 points, and it just came down and hit target 2 as well. Move your stop to 188. Target 3 in the bag. Hit it perfectly. Move your stop again to 177 if you're in that trade still trailing. Good morning, Dan. Stop has moved even lower. Now the stop is at 168. Trying to get to its target 4. And stop has moved to 162. 156 if you're in the trade trailing. 156 is a stop. And now the stop has moved again. 152. And now 146. 141. Stop moving down quickly. and really falling off here. 131. Is anyone in this trade? What a trade. And now 126. John, no, I didn't do that. I wouldn't do that. I'm not sure what happened, why they would have disappeared. Maybe you had to hit another button or something. I don't know. 118's a stop. 116. All right, you guys get the idea. If you're in the trade, just follow the trailer down. On the pound, Aussie this morning also. Oh, it started a little too soon. Just missing a really nice short trade. Start time's at 8:30, so it was already past that. So that one's still waiting. Good morning, Roger. Unleaded gas, 9 o'clock start time. There it is. Hitting targets 1, 2, and 3 for a one and done session. So unleaded gas also delivering the goods with its first trade this morning. 41, 63, and 86 ticks on those three targets. That's $4.20 a tick. What else? All right, well, the YM finally stopped out at 35.076. So look at that trade this morning. Short from 194, getting all the way down to 76. What's that, 118 points? $118 in 5 minutes. My work is done here. Take a look at soybeans. Here's soybeans right at 8:30, coming down, hitting its primary target objective. Good for 2.5 points. And then stopping out using the green stop, borrow on that. So that trade's also one and done. Guys have any questions? Quick look at the Russell E Mini, see how that one would have done with this chart. Not so great, actually. Russell E Mini, not so great. I have to find another chart to use. I'm not crazy about this one. This Renko chart with the micro NQ, I always say it's good to wait 4 minutes. Maybe that's not true. I mean, that was just a hunch. I don't know. A couple strong winners here in the first minute to 2 minutes. Waiting 4 minutes. This trade here, also a winner, getting to target 3. Just always found the NQ to be really manic right at the open, so waiting a few minutes seemed like a good idea. Anyway, that one also one and done. Some nice risk reward ratios on these trades too. Anyway, target 3, 19.5 points. I think it might have just missed it by a tick. 16,230. Yeah, missed it by one tick. If you miss a target by one tick, you got to take action and make it a profitable trade. Rare. That's already a deal, already an awesome deal, John. The price is way underpriced. Platinum members don't really need anything else. Unless you wanted the Spotlight Forex alerts, maybe. That one's pushing on close to 18,000 pips now, hitting new record highs. The volatility in the market's just been outstanding. Yeah, Johnny, that's correct, but that's for the trailing stop only. So it would depend. It would depend on how many positions, how many contracts, but a single contract trailing only, definitely it's a nice trade. 118 points. That doesn't always happen. The primary objective in this plan, using the 14-point range, momentum range bar, is just target one, which was 30 points. So that would have been $150 a contract if trading a single position at target one. Took about 2 minutes. You could always opt for larger targets. You'd want to test it, of course. JDS, since the when Spotlight FX Alerts was launched, was in I believe it was June, a year and a half ago. Would have been 2019. Yeah, 2019, 2020. Oh, no, wait. 2020. Yeah, year and a half ago. That's including all the targets in the trailer. So 3 targets in a trailer. I just happened to have a wheat futures contract open. I was checking out with Catapult Grains, hitting new equity highs today, actually. Give you a look at that. It's not quite 18,000 pips, JDS. It was 17.8 or something like that. Kevin was updating me on it yesterday. Let me tell you what he says. $17,590. So 410 pips shy of 18,000. So here's a wheat futures contract. This trade's just like soybeans. It's $50 a contract. Quick trade this morning. You can see hitting its target 3 and then stopping out. So that trade took about a minute and a half. Not that big of a trade, only 2 points, but you could see it moves really well. And just really nice breakout to all-time equity highs here over the last several days. Right there. So some of these under-the-radar markets often go unnoticed, but if you're looking to juice things up and add something different, there are choices. There are other options you can consider. Wheat juice, right. Watch out for the gluten content. JP asking, would you go over the pros cons of using the POQ gold ticks in the TA? Good question. Let me see if I have one. This is just a random look at any old chart. So you're talking about the ticks. JDS 1,000 pips a month. Yeah, I mean it wasn't that smooth though. I mean it averages out to that, but There's been some huge growth months and some months where it didn't feel like we were making progress. Using daily charts, you have to be very patient. But yeah, that's right. It is about 1,000 pips a month when you put it in those terms. So are you talking about this one, Q53, JP, POQ? Or are you talking about, you're talking about Q54, right? 54, 55. So basically, what this one says is that Q54, yeah, this says, first of all these inputs work together, whichever happens first, and then it quits trading. So in this case, you can test a maximum number of ticks as a goal. And if you hit that level or more, by the time the trade closes, it will stop taking trades. So let's say you wanted to quit. This is the NQ, for example. It's the micro, but it doesn't matter. It's $20 a point for the full size and $2 a point for the micro. So just it's relative to what your capital is. But let's just say you want to quit with 20 points of profit. So 20 points. 20 points is 80 ticks. Now, you don't want to just pull some random number out of thin air. You could use the Trade Assist automation to optimize the maximum number of ticks that you should shoot for on a daily, per the trade plan, the one that gives you the highest percentages of just winning the most over time. So you could optimize it, and let's just say it turns out that it's 20 points. That would be 80 ticks. So the POQ goals would say you'd put in 80, right? You can match that up against maximum losses, which is Q57. It's in negative numbers. So it could be, you want to quit with 80 ticks, and you want to quit with an 80 tick profit, or you want to quit with, I don't know, a 50 tick loss. You just, again, you optimize it. You could optimize one versus the other. And then whatever happens first, it'll stop. But it'll also compare it to power of quitting, how many wins and a positive result, maximum trades, maximum losing trades. So it just depends on what you want to use. Whatever you don't want to use, just put a lot of nines in there, because then it will never happen. And so you turn it off like an off switch by putting in a lot of nines. Make something that could never happen. But if you had, for example, 80 ticks, let's say you're in the middle of a trade and you make 80 ticks, but at the end of the trade, it comes off. It stops out at your trailing stop, and it's less than 80 ticks. When the trade closes, it'll then take another trade. So it's based on the close of the trade, not intra trade. Okay, does that make sense? This has got 1,373 trades dating all the way back to November 16th. It's taking like every single trade, and there's a ton of trades. There's no power of quitting settings. Let's say that we wanted to see, based on, we want to quit. Well, let's optimize. If you want to figure it out, you can open up Format Strategies. You can come all the way down to Goals, and let's say we want to optimize between, let's just say 20, well, got to hit the optimize button. Let's say we want to optimize between 20 ticks and 80 ticks. And let's just do it in 4 tick increments, right? Because each 4 ticks is a point. And then we can run this and see what it says. Let me just double check something. Yeah, so it's starting at 8:30 and ending at 14:50 Chicago time. So 8:30 Chicago time. And that's putting one contract on each. Let's just say we're only trading 2 positions, right? Let's say we're trading targets 3 and 4. Or unless you want to do a trailer. Let's do a trailer. Let's go targets 3 and trail. Okay? And then let's see what the results are. So we can go ahead and run this. Normally, when I do a power of quitting, I'm going to look for how many trades and a positive result versus how many maximum trades versus how many losing trades, and let it kind of give me the combination that makes the most sense. And what usually ends up happening is the fewer trades, the better. Now, just by going with a maximum number of ticks, it reduced the trading all the way down to 82, and it was not profitable. So we can go ahead and look at the optimization report now. It's kind of weird. They all gave the same result. So how would we fix that? So 20 ticks. The next thing I would do is maybe we could try maximum ticks versus maximum losing ticks, and when does it quit? I'm not sure this is going to help either, but we could try. And I think it would be, you have to go from start to finish, starting low, ending high. I think you'd have to go minus 80. This is kind of weird, to minus 20, and we'll do it in 4-tick increments. Let's see what that does. Yeah, I don't usually use this particular. I know Will likes this a lot, but I usually, let's see. Hold on. We want to do the other one also and do them simultaneously. Hopefully it's not going to be too many. Let's see. So now we'll do them both against each other. It's 256 tests. Won't take too long. After this, I'll show you what I think is the best way to go. I'll be right back while that's running. All right, well, you can see it is taking a bit of time, more than halfway through, but it got a little bit profitable. The plus 20 or minus 52, whichever happens first, is producing a bag of peanuts for profit. Well, I'll let this run. It's almost done. And then I'll show you the way I think you'd want to use that. Also, remember I said we should start 4 minutes after. So instead of 8:30, maybe you run an optimization test on your start time. I'm just guessing at 8:34. Maybe that's not the best time. It's just kind of off the top of my head. But we can use the tool to optimize the start time as well with this chart. I think that would be beneficial. But I would say going with power of quitting, number of total trades and a positive result versus number of losses, and start from there, and then run a maximum tick versus maximum loss in ticks, and see if that improves stuff. So I'll show you what I mean by that. All right, so you can see that it produced a pretty strong result, 306 profit factor. Remember, $288. This is a micro, and it only gave us 18 trades. So remember, there were like 1,800 trades. It cut it down to 18 trades. So that made a huge difference. Remember, this is only dating back a little bit, a couple weeks. So in 2 weeks, that's about right. So it made a big difference. 6 winners in a row, only 1 loser in a row. So it's a little bit deceptive because it's not a big number, but you're talking about 50 cents a tick and $2 a point on the micro. So it's actually really, really good. Look at the win rate. Interesting, huh? So you do the two together, maximum versus minimum. I mean, maximum winning ticks versus maximum losing ticks. So here's what I think. The way I would do this. See if it makes a difference. So we know 20 total ticks versus 52. So it'll actually have, it allows for more losing ticks than winning ticks. That's kind of interesting. Counterintuitive. Got to make these a lot of 9s in here so that it doesn't. All right, so this is how I would do it. I would go power of quitting, how many winners and a positive result, right? And I'll go between 1 and 5, say. And then since it's 2 contracts, I'm probably going to want to have 2 ticks as a minimum to be considered a positive result. If you want it more than just a break even plus commission, you might put in 4 ticks. You can optimize the minimum ticks as well. Let's just keep it at 2. And then for total number of trades, I'll go 1 to 5. And then for total losing trades, I'm going to go 1 to 5. So I just keep it 1 to 5. So here, let me repeat this. The first one is total winners and have a positive result. So if you win on the first trade, you're done. It quits. But it's going to optimize up to 5 total trades to get to that winner and a positive result, versus total number of trades versus total number of losing trades. And it's going to combine all those and give a really interesting set of results. Let's check it out. Now, notice that I didn't do goals. Needs more nines. Or negative. I didn't do a goal and ticks or negative, losing ticks as part of this study. Maybe add that after. So let's see what this does. 125 won't take as long. And Ron pointing out that, so the crude oil mini session, I'll go ahead and while this is running, we'll check that out. So this trade plan has a 9 a.m. session and a 10 a.m. mini session, and this is using the trade off of the 20 SMA. So it's just like the yellow trade, which is off of the 50 moving average, but in this case, it's off of the 20 simple moving average instead of the 50 exponential moving average. And you get in sync. So here's the setup at 9:58, and then it becomes 10 o'clock, and you could take the trade as it pushes through the entry, just like we saw with the YM earlier when we got in sync with the earlier setup. Trade looked just like this too. Nice, big, huge winner. So crude oil coming down, hopefully pushing down on 70, and we'll get back into the 60s. And I'm really sick and tired of the $5 a gallon to fill up my car and my kid's car, my daughter's car, my son's car, my wife's car, my car. Oh my God, it's obscene. It's abusive. Anyway, no one cares about that. Did you guys check out the options trade that I sent out on USO last week? Anyone check that out earlier in the week? I'll show you guys that one as well. So anyway, a nice big fat winner on crude oil. 10 a.m. mini session. Still got about 40 seconds left on this test. But you can see that it's more profitable so far. JP, you see that? 346, 346 bucks more than the 288. That is a long trade on the pound Aussie. 86.47, targeting 63, 72, 81, and 86.90, and the stop is at 86.24. Don't forget to adjust that off the 25. All right, here comes the data. Been a lot of really nice trades this morning. All right, let's check it out. What happened? All right, so this is interesting because even though the profit went up, the profit factor went down. I didn't look at the average. It looked like the other one might have been more profitable with fewer trades. This gives you more trades, 25. So that's what this looks like. And it may not be the best setting, though. That doesn't always choose the best choice. So the way we figure that out is we look at the optimization report and sort on all net profit. And you can see that it likes a POQ of 2 trades and a positive result. I mean, these are all the same, but ultimately it's a maximum of 2 trades or 1 loss, whichever happens first. And if we sort on profit factor, you can see that there's some profit factors that are bigger, 2.97. And that 2.97 is because of 1 maximum trade. So what this is telling us is that one and done, if we were to find 111 all the way across, which is this, is more profitable, 78.5% win rate. So remember what I said, less is more with the 1579 average net profit. Still, the other one gave a 306 profit factor. I find that fascinating. So if we apply that to the chart, it cuts it down to only 14 trades. Looks pretty similar. Definitely made more money on shorts. Remember, this is a small sample set. 98 to be exact. Oh, wow. Yeah, sounds good, Ron. 98 ticks. That's $980 on the trailer on crude oil. So just continuing with this, I mean, it's definitely not a big sample set, but now what you can do, just to finish JP's interesting question, is at this point you can go ahead and test for goals and see how that might look. Let's just see what happens. It's not going to take very long because it's only a few trades. It remembers my inputs. So it'll be interesting to see what happens here. We'll come back to this in a moment. So just looking at the crude oil trade here. So crude is just really flowing nice. From 71.99 down to 71.01, 98 cents, $980, and then the very next trade also a target 3 winner. Some days are like that. Yeah, we didn't look at heating oil. Today's just one of those days where just everything's just moving. There's so much volatility in the markets. A lot of money to be made when the market conditions are like they are now. A lot of rebalancing with the understated inflation. I was hoping I had a USO chart handy. I guess I can just copy and paste. Do I have one here? Oh, there it is. Yeah, so this trade here. So this was really nice because I went away for Thanksgiving. I know a lot of you did too. Placed this trade on the 19th, 10 days ago. A week ago Friday. At least that's when it got filled. And it went up a little, right? Took a little heat leading into Thanksgiving. Then on Black Friday, Black Friday, this happened. It gapped down and slammed down through targets 1 and 2. And if I remember right, this one picked up 45%. and I think the target 2 picked up 78%. So I had March 55 calls. I think it was 495, and target 1 made 720, and target 2 made 870 or something like that. Anyway, big percentages. And then the stop moved down. So now the stop is here instead of here. So the rest of my position has got some profit in it as well, but I'm holding out to see if it can break lower in just a few days. I mean, I bought a March option just to be, give myself extra time. Probably more time, obviously more time than I needed. But, I'm looking at these other trades that could take a while, and I always triple the average hold time. And I just felt that I'd rather pay extra for more time. I don't mind doing that, because then if I lose, I sell the option back and recapture more premium. So anyway, probably could have done February options and got them even for less, maybe even made more. I don't know. But anyway, 45% and 78%, I believe, is what the percentage gains were in a matter of days using counterpunch and simple put options. And USO is one of those markets. It's a really good one. It just works a lot. Just working backwards, the last trade was the white trade. That one made target 1, a little smaller than this, but still good gains. And then the prior trade, this nice green trade hitting all its targets and trailing. Then the purple trade getting to target 1, then stopping out for profit. Then this green trade, you can just see the story. It just wins a lot. You see, just going backwards. Haven't even seen a loss yet. Man, here's a loss. So a trade like this, you lose, but you don't lose your entire option. Remember, you're never risking more than the cost of the option, but you're not even risking that, because a few days later when it stops out, it would have been here. You would have gapped through. But still, you're making premium. Your option still got premium. It has value. So you're selling your option and recapturing some of your premium. So even your losses are a lot smaller than they appear. So this is a really great way to use counterpunch. And the Black Friday deal is still on till tomorrow. Anyone who doesn't have counterpunch, you still get it for like cheaper than it's ever been. All right, let's go back to here and see what this shows us. By the way, we're looking at Catapult with this optimization study. So the performance report, it didn't change much. Probably didn't do much of anything. So let's just take a quick look at the optimization report. For some reason, that's the wrong chart. Oops. Yeah, it didn't really do anything. It didn't change a thing. But anyway, JP, so that's how you do it. And you can see that going with the maximum versus negative ticks as a goal produced slightly higher numbers. So that's interesting. Maybe a larger sample set would change things. I'm sure it would, actually. But anyway, there you go. Questions? JDS, how do you determine timeout? Are you talking about how much time in the future for options? I think a good way to go is if you look at a certain number of trades, maybe 20 or 30 trades, and just quickly look at them and try to come up with like an average hold time. And if you have automation, it'll tell you. And then from there, just triple it. like I would triple your average hold time as a safety, because some, if it's average, then that means it's going to be longer sometimes and shorter other times in order to get to that average. So I think tripling your average hold time is a good rule of thumb. And you're going to pay more, but you get it in time value. So if you try to go with the cheaper option, you could lose money even though you should have made money because of time decay. So you don't want that to happen. And you also have to think that if the trade does lose and hit your stop, how do you regain maximum amount back when you sell your option back to the market? So I want extra time for that. So it costs a little more, but to me, it makes sense. It's worth it. So I don't think this has a strategy on it, does it? Maybe it does. All right, this has a strategy on it. I didn't use the strategy, but we can use it just to kind of look and see. This is not tuned up. The strategy is not tuned up, I don't think. But just to give you an idea, if you were to look at the performance report, just by mere luck, you could see it makes $1.30 on average every time you place a trade. This is looking back 5 years. Not bad, huh? Anyway, so what you could look at is in the trade analysis tab, here's your time averages. So your average time in the trade, 14 days. So, 14 days times 3. So really 6 weeks. But I still go longer. But I mean, you could use this as a guide. I'm not the most sophisticated options trader. Like full disclosure, I don't know much. I just know, to trade in the direction I want to go and a few simple techniques without overthinking things. But I'm by no means an options guru. I just know my strategies really work well, especially counterpunch. It's totally directional, and all the principles are sound principles. I mean, they occur in nature, they occur in every chart. Buyers and sellers get exhausted. You have a balance of power demarcation line, you have price action, you have patterns that will always happen. And so for those reasons, this strategy works, and it works really well. So I don't need to know more than that. I don't know why the light bulb lights the room when I flip the switch. I just know I have to flip the switch. So that's kind of what my options trading is on that level. Sure thing, Don. So Ron and JP having an interesting conversation about the power of quitting rules to catapult heating oil, one of the trade plan versions, version 1. I'm not sure if I have that handy. You take a look. Is this it? Maybe. Let's take a look at this. You can see the explosive moves on heating oil. Wow. This is version 1D. Not quite the same, I'm sure. Yeah, version 1D. One on this trade and missed the next big trade is probably a one and done plan. Take a look. Gee, it only has a 133 profit factor. Sorry, guys. I wish I could do better for you. It's only won 9 in a row and lost 1. Well, 10 trades. You get anomalies when you have small sample sizes. They don't really mean much, but that's pretty good. A 133 profit factor. Almost feels like that should be against the law. So this plan has won the last 9 out of 10, dating back to the 16th of November. So Johnny, I think I know what you're asking regarding the Dowie Mini. Remember, when you're risking, first of all, there is a micro. So this full mini is $5 a point, but the micro is 50 cents a point. So you could always use that. I don't know how the volume is. We could take a look. But the way you figure it out is you want to calculate between your entry and your stop, right? So it says here that's 37 points. So that's $185 risk. So you have to back that out, put it through the math to figure out how much money you need. So if you have $10,000, you could afford $200 of risk, right? Well, this is $185 of risk. So just, fast and dirty round numbers, you need about 10 grand to risk $185 and stay within that 2%. Understand? Does that make sense? You want to look at your entry to stop. Now, this is Spotlight Master Suite. This isn't Catapult. Catapult actually tells you how many contracts you could afford. So Catapult is more modern and has a unique tool in it where you could put your capital and how much you want to risk, and then it'll tell you how many contracts you can trade. So for example, this NQ chart, this is a Catapult chart. And let's go back to the first trade at 834. Say, pretend this is the YM. It doesn't really matter. If you want to put how much money you have to start with, this says $5,000. Let's just leave that. This is a micro account, a micro chart. It'll let you trade 5 contracts. It says so right here, risking 2% with a $5,000 account. And that's taking the entry to the stop, a risk of 9.5 points at $2 a point. So let's say we wanted to try a YM with this same chart or a similar chart. Yeah, JP and Ron, I was showing version 1D. So it probably has like some sort of power of quitting or start time or whatever that's the same as version 1, but just a variation. I don't remember. That's usually how I name things, though. All right, so let's go ahead and trade. Let's change this to the micro YM. And let's see. MYM Z21. And let's look at the 14 momentum bar, the same chart we were looking at with Spotlight a moment ago that you were asking about, Johnny. And then we'll also look at a Renko just for the heck of it. I think eight bars, 8 days back's enough. This is going to give you an idea. We'll go back to 8:30 and look at the same start time. We saw Spotlight won. I don't know if Catapult won. We'll find out. Don't forget to hit the thumbs up button for me, guys. All right, so coming back to 8:30, and you can see the first trade lost. So it let you risk 7. And this is probably set to a one and done. Let's take off the POQ. Not that it matters, but let's just see. Maximum total trades, maximum losing trades, goals, minus goals. All right. So it did catch the move here, but it was the second trade this morning. The first trade was a loser, and then it caught the second trade. And the second trade let you trade 7 micros. How much would be at risk? Well, first of all, I want to point out that the volume on the micro YM is rather impressive. It's a lot better than it was last time I looked. 160,000 contracts today. So the micro contracts are really gaining in popularity. That's good news. So remember, the micro is 1/10 the size as the mini. So the E-mini is $5 a contract. This is 50 cents a contract. Okay, and it's risking 28 points. It's $140 for the full size. So it's risking $14, 1/10, $14 per micro. So you'd have to multiply that by 7. 14 times 7. Okay. How much is that? Is that about 49 bucks, I think? What's 14 times 7? No, it's more than that. 98 bucks. All right, so it's risking 98 bucks. And that makes sense because I put $5,000 in for capital. If you want to put in 10,000, you well, obviously it's going to double that. It's going to be 14 contracts. And you wouldn't trade it until you got really good, right? I mean, that's just when you get to the point where you're ready to trade with your full risk, your full 2% risk. Got a lot of work to do before you get to that point. Does that answer your question? So just for the fun of it, let's go ahead now and look at what the Renko, we saw how it looked with the NQ. If we go custom Renko, I want to do 1/3 offset. So I have to either go with a 15 or a 12. I'm going to go 15 because there's a lot of range these days. So we'll go 15 with a 5 offset. And that'll be very similar. That is the same proportionately to what we saw with the NQ. See what that looks like. Yeah, maybe not so great. I don't know. We have to go back to the start time, but definitely a lot of up, down, up, down. Well, there's some really nice trades to start with here. Let's see. Well, here's your first trade of the morning. Actually, it was really good, wasn't it? That lets you risk 5 contracts, Johnny. So slightly larger risk profile. And that's using target 3 and the trailer. So 81 point profit, 405 bucks, and then the trailer a little bit more. and really nice risk reward ratios. So if you're risking 39, you have positive. If you're getting out at targets 3 or 4, you're making more than 2 to 1 on your risk. So that's really good. I'm not sure this is the right chart. This is tuned, these particular, this configuration of targets and the trailer, etc., is based on the NQ, which is a quarter point tick. So this YM can probably be worked and optimized a bit more just to tune it up to this chart, and this symbol could probably be improved. All right, so it's probably going to do it for me today, guys. Let me know if you have any last minute questions before I say goodbye. I hope you enjoyed this session. Johnny, you're not putting 5,000 on the line. You're putting 5,000 into your trading account. That's how much capital you have available. What you're risking is 2% of that capital. I think that's what you're missing. You're risking the stop to the entry, however many ticks or points versus that symbol and what that's worth, times how many contracts. And that should represent 2% of your account if it's a proven trade and a proven trade plan that you could execute. So just think of your brokerage account with how much capital is in it, and then you're going to risk a small amount of that on any trade. Don asks, is turning on all color trades for CPX done entirely in Edit CPX2 Calc? Or are there other edits to make? Well, it's in the calculator. It's not edit. It's the inputs. So you open up the calculator. This is probably the full counterpunch trader, but it's the same thing basically. And you go to you have a white trade, green trade, purple trade. And you just set them true or false. That's all you got to do to turn them on and off. It represents 2% of your trade account if you put on the proper position size, Johnny. You have to risk the proper amount of contracts for it to be 2%. Remember, the one contract wasn't $98. The one contract was $14. Yeah, okay, that may be true, Don. If you hover over, the way I do it is you click on a dead space on your chart to activate the chart. Then you put your mouse over one of your targets and you left click really fast twice. Click, click. And it opens up the calculator. So whatever it's called, I don't care. Again, it's the light goes on when I flip the switch, right? That's all I care about. So TradeStation 10 changed a bunch of names. Who the hell knows why they did that? But they did. But it's still the same routine in opening it up. All right, then, guys. Great questions. I appreciate all your interaction. Please hit the like button for me. Hope you have a wonderful day. John will be in here tomorrow. One more question by Johnny. Back to YM, won 118 points in 5 minutes, 590 in profit. How much was that investment? Well, all right. So first of all, the 590 in profit was only the trailing stop. It was the position that trailed. Okay? It wasn't the additional positions that might have exited at the targets. That was just how much the trailer made. And if you go back to the original trade, again, you have to subtract the stop from the entry, or you could just see on the calculator. The calculator tells you that. So if you click on the setup bar, it says the risk is 37. 37 times 5. That's 185 bucks. That's what your risk was. Your risk was 185 bucks a contract. The trailing stop made 590 bucks. What was your investment? You can't look at it as an investment. It wasn't an investment. It was a trade. How much did you risk? 37 points times $5 per contract. Risking 2% of your account will tell you how many contracts you would have traded. If you were trading a $5,000 account, you would have risked one contract, because that only lets you risk 200 bucks, and this was $185. So you would not have been able to afford a second contract. It would have put you over 2%. Understand? Don't think like it's an investment. It's a trade. How much are you risking to place the trade? Well, you have a formula. Sure thing. I just wanted to make sure you understand it, Johnny. But you could follow up with me later. All right, everyone. Have a wonderful day. I'll see you on Wednesday. Don't forget, John will be here tomorrow. Bye, guys.